Should you buy Alphabet ahead of its stock split? Google looks primed for more growth in the near term. And some of the key points in this article is that Alphabet just announced its first stock split since 2014. There is plenty of momentum with Alphabet in the near term to justify buying the stock now, and the tech giant's investments in artificial intelligence are driving massive gains in its advertising business. What's going on, my friends? It's your man Adam Ace Spencer here with another video today. I'm diving into this article talking about Alphabet, or what most of you guys know as Google, which is also the same company who owns where you are most likely watching this video on. And I'm talking about YouTube. And ultimately, a lot of people don't know. I will be completely transparent with y'all because I always am. I do own some Alphabet inside of one of my personal M1 finance portfolios. Now, most of you are familiar with my dividend portfolio, where we do an update of that every weekend, along with my growth portfolio. And neither of those portfolios have Alphabet inside of them, but I do own Alphabet in another one of my M1 finance portfolios, a personal portfolio. But ultimately, let's dive into this article because I don't think enough people are investing in Alphabet, and oftentimes it's because of the price tag associated with some of these stocks, like Amazon as well. And also, if you believe it's just overvalued, you don't think it's worth it, of course, that's obvious. But beyond that point, again, people will see a price tag like this and be like, whoa, but not knowing you can do fractional shares with M1 Finance. So if you only can do $25 a week or $100 a week, well, that's better than nothing. And you can do fractional shares where you spend $25 every week, and hopefully, and before you know it, it's going to be beyond this $2,772. Now, of course, that might take you a little while if you're doing $25 a week. However, with this stock split, that also will increase the amount of time it will take you to own a full share. But technically speaking, it doesn't really matter. That's my main point. Doing fractional shares and getting into Alphabet now before a stock split it's going to be the same exact difference. It just seems that way. A lot of it really is a psychological thing, and retail investors, they see a cheaper price tag and they tend to jump on board. So without further ado, let's jump into this article. And before we do, if you guys haven't already, definitely hit that subscribe button, and welcome to the channel if you're new here, where we talk about making, managing, and growing money. Shares of Alphabet, Google, surged close to new highs following a period of strong revenue growth in the fourth quarter of 2021, ended December 31st, 2021. Not only did Alphabet deliver impressive revenue growth of 32%, but it also announced a 20-for-1 stock split. If approved by shareholders, Alphabet will issue 19 additional shares for every share owned on the record date of July 1st, 2021. The split will take effect on July 15th. The last time Alphabet split its stock was in 2014. While the split will make Alphabet's $3,000 share price much cheaper, stock splits really don't matter in the grand scheme of things. Stock splits are not free money. You get more shares, but the stock price also drops proportionately, so the total value of your investment remains the same. But the good news is that Alphabet looks undervalued at current price levels and could head higher in 2022 and beyond. Engagement on YouTube is surging in the creator economy, and Alphabet's investments in artificial intelligence, AI, should make Google search smarter in delivering relevant results for individual users and advertisers over the long term. AI is at the heart of Google. YouTube became enormously more valuable to Alphabet during the pandemic. On Apple's iPhone and iPad, specifically, YouTube's monthly active users, MAUs, are estimated to have nearly doubled to 844 million since the beginning of 2020, according to data from Statista. Millions of people using Google, Alphabet, Gmail, Maps, and other services every day. The high traffic volume fuels Alphabet's advertising revenue, which amounted to $61 billion dollars in the fourth quarter, an increase of 32% over the year ago quarter. Google services generated nearly $26 billion dollars in operating profit on $65 billion dollars in revenue last quarter. Alphabet is reinvesting those profits in artificial intelligence, which makes its services more helpful to users looking for information. It also helps businesses manage their advertising campaigns, as Alphabet's chief business officer, Philip Schindler, noted on the earnings call. We're using more AI to help advertisers measure their results and bid intelligently with data-driven attribution, for example, which uses very advanced machine learning to more accurately understand how each marketing touchpoint actually contributed to a conversion, obviously, while respecting user privacies. AI-driven advertising is helping Google and YouTube perform better than other ad-dependent platforms. For example, Facebook owner Meta Platforms expects weak advertising revenue in the near term. It cited concerns over the economy that are leading some advertisers to tighten their advertising budgets. Meta also blamed increased competition for people's time, and YouTube might be to blame. YouTube ad revenue grew 25% to $8.6 billion dollars in the quarter. More people are engaged with YouTube to watch product reviews, makeup tutorials, video games, funny pets, and learn how to make more money, of course. There are 2 million creators using YouTube to monetize their video content. I'm not quite there yet, but we get in there. We get in there. And it's estimated that this creative ecosystem contributed $20 billion dollars to the U.S. economy in 2020. A solid long-term investment. In 2021, the company's net income nearly doubled to $76 billion dollars. That has also brought the stock's price to earnings ratio down from over 30 a year ago to just about 25 at the time of this writing, which looks attractive relative future growth expectations. Analysts expect Alphabet to grow earnings at an annualized rate of 27% over the next 5 years. Now that doesn't sound too bad, my friends, not too bad. Alphabet's massive profitability gives it plenty of cash to improve existing services that make them even more valuable to users. This cycle of investment and growth should give investors confidence in the company's future. Stock splits might be less important today than, say, 10 years ago due to the availability of fractional shares at some brokerage. Hey, and my friends, that's literally what I was telling you at the beginning of this video, where I do have a link down below to M1 Finance, and you can start your own portfolio, just like we have our dividend portfolio every weekend, our growth portfolio update every weekend. Well, you can add your own portfolio, create your own portfolio similar to those, or start brand new. Maybe consider adding Alphabet, regardless of how much its current price is, around $2,770. Let's finish this up, because the split certainly could lead to more demand for the shares from those who can only buy whole shares. So what they're basically saying is there are some people who don't use platforms like M1 Finance, and they can only buy a full share. And now that they'll have access to Alphabet at a lower rate, they can actually afford to buy a full share instead of having to do fractional shares, which they couldn't do because their broker doesn't allow it. So, regardless of what impact the split has on the stock price in the near term, investors should absolutely consider investing in Alphabet. With such a strong brand and a highly profitable business, this is a stock investors can build a portfolio around. That said, my friends, you should absolutely consider adding Google, YouTube, all of their products, Gmail, Maps, anything you guys pretty much use that's like internet based is like Google owns it. No, not literally, but all of these platforms here, Google, YouTube, Gmail, Maps, and others that you probably are using, might not even know, Alphabet owns them all. So if you don't plan to stop using any of those products that are listed right here or some of their other products, then why wouldn't you consider investing in the company as well? Of course, this isn't legal or financial advice. And as I mentioned, I want to disclose that I do own some Alphabet inside of one of my portfolios as well. So I'm going to wrap this video up there. I hope you guys found this video helpful, informative, motivational, encouraging as you are trying to think of ways to grow your money. We know inflation is going to kill your money and your savings, which, yes, you still do need to have that emergency savings. But after that emergency savings, well, the rest of your money should be allocated for every month. And one of the places you should consider putting it is inside of some sort of growth tool, a growth platform, a growth device that's going to help you with getting that money to grow, getting that money to work for you. And one way you can do so is by investing in a company like Alphabet. So what are you going to do? Are you going to buy Alphabet ahead of the stock split? I'm curious to hear what are other people doing. Feel free to leave a comment down below. And while you're down there, smash that like button. And don't forget to subscribe to the channel if you're new. And much appreciation for watching. But all right, my friends, you already know what it is. I got to keep it moving. But I'll see you in the next video. Peace.